Well, the county comes up with a value for the property every year. They send you out a statement saying we either believe it's going to be this amount or it is this amount, one or the other. And then you have a certain amount of time after that letter is sent to you to either challenge it or agree. If you don't want to challenge it, you agree to it. Okay.
Mm-hmm.
And the biggest problem is a lot of my clients don't know that. And so we need to kind of, let them know, hey, look, you've got 10 weeks or 2 months or whatever it is to respond to this and file the appeal. And the appeal basically is based upon a value we come up with on the property that's different what the assessor has. So it might be based on comparable sales, might be based on an appraisal on the property, might be based on the purchase of the property itself.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Steve Anderson is a property tax appeals specialist. Steve, welcome to the show.
Thank you, Sam.
Absolutely, Steve. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
I started in 2007. I was approached by the local county to be on the property tax appeals board there. I did that for 4 years, for over 2,000 cases as a hearings officer. And then in 2011, I started hanging my shingle out and help taxpayers. I think they're getting a very good shake with the tax appeals board and the assessors. And so doing that now for 11 years, we work in both Oregon and Washington. We're the largest filer in Oregon, both at local level and state level. And we've helped thousands of customers save millions of dollars in property taxes.
That's great. I know that's music to practically everyone who's listening to this show. Property taxes are, by and large, I think almost every investor's largest expense. So, I think this is obviously worth paying attention to. Steve, I just have some questions for you about the process. You mentioned their hearings officer, a bunch of things that kind of made me go cross-eyed, and probably a lot of your clients do. But can you break down what is the property tax appeals process in a nutshell?
Well, the county comes up with a value for the property every year. They send you out a statement saying we either believe it's going to be this amount or it is this amount, one or the other. And then you have a certain amount of time after that letter is sent to you to either challenge it or agree. If you don't want to challenge it, you agree to it. Okay.
Mm-hmm.
And the biggest problem is a lot of my clients don't know that. And so we need to kind of, let them know, hey, look, you've got 10 weeks or 2 months or whatever it is to respond to this and file the appeal. And the appeal basically is based upon a value we come up with on the property that's different what the assessor has. So it might be based on comparable sales, might be based on an appraisal on the property, might be based on the purchase of the property itself. You would think the county would just go ahead and adjust those values. They don't, because obviously it doesn't benefit them. So that's what we do here. And our review process pretty much is free to the client. I want to qualify that. We don't do multifamily projects. We don't do, shopping centers for free. We'll charge you by the hour. But if it's a single family dwelling or single tenant commercial, typically we do that for free. Get back to you, recommend what we think we should do, what the value is, and what the potential savings are. And then if they decide to engage us, we go forward.
And when you go forward, what's that process with the city or the county? I know, again,
typically you file an appeal. In Oregon, you're pretty much required to have an interior inspection of the property. So we coordinate that with the property owner. We actually attend on their behalf. A lot of my owners don't even show up for that. They just give me a key or leave a key somewhere, and we go through the property and look at it with the county. They're there to take pictures of the property, looking for verifying square footage, looking for condition, that kind of stuff of the property. And then after that takes place, typically we just start negotiating back and forth on values based off that inspection. And 95% of my cases get resolved before they ever go to trial. So, but we're also very picky what we select. There's properties that we look at and go, this isn't worth fighting, and there's not enough money here to make it worth your while or our while to be involved. And or, do you really want the county to come out there and look at what you have that they don't know about? Because there are things, we can run into she sheds on properties that weren't ever, permitted, or additions on properties that weren't ever permitted, that kind of stuff. And I can advise my clients, potential clients, look, don't file, because they're going to come out there and they're going to add value over what they're at right now. And I don't want to do that to you. So that's what I kind of do.
That's really interesting. So you guys file the appeal. You said 95% of them get resolved without ever going, and you use the word, to trial.
Right.
The other 5%, what does going to trial mean?
Well, at the local level, we meet with a 3-person board here in the county. And we submit a value and the county submits a value. We go in front of the board and kind of arm wrestle over that value back and forth. I use that word loosely, but yeah, we go back and forth on what the value really should be. and the county board makes the decision. It's an independent third party. It's doesn't work for the assessor. There are three local citizens-based taxpayers that are appointed by the county commissioners. At the state level, the tax court, we have magistrates and judges there that we submit and file property information to there, and we actually have physical trials there. We actually go down to, in our case, about 50 miles away. We go down to a courtroom down there and testify, and have appraisers and that kind of stuff too, testify too. But I haven't been in a state tax court in about 3 years, and we filed 59 cases there last year. So that gives you an idea of our ratio there. Although I foresee it happening this year, we'll probably have more cases next year going to trial than we did this year. So, or in the last 2 years, I should say. So,
got it. That's really interesting. Thanks for breaking that process down. I know for a lot of us, that's probably something that we don't deal with on a daily basis. So I think just understanding the mechanics of how these get resolved. So Steve, I guess the question I have for you is, what you'd mentioned that there are projects that aren't worth looking at. You gave an example there of, hey, maybe there's, more buildings on the property than what maybe were permitted, things like that. We don't want to increase the value. Are there other situations where you'll look at a potential appeal and just say, hey, this isn't worth pursuing? And what are those, if so?
We run that a lot in the multifamily and commercial properties here locally, because their real market value is really could be kind of high, but they're actually paying taxes on a lower value because of the way the taxation system works here in our area. So they could have maybe a $4 million valuation put on by the county, and the person goes, it's not worth $4 million. And they call me up or email me, and I look at it and go, yeah, but you're only paying taxes on $2.5 million. And you paid $2.4 million 5 years ago. So it's hard for me to go in front of a board and say it's only gone up $100,000 in value in the last 5 years. I mean, then especially in our market, it's been pretty good, and multifamily's been really good here. So a lot of times it's educating the client. Secondly, if there's a situation where they're going to save like $100, time they pay me, they're negative on the whole thing. So, and some people say, I want to do it for the principal thing. Well, I'm not involved in that. I should say that I am, but I'm not, because I don't want to waste people's money, is what it boils down to. And I have to sleep at night. And the way I do that is I make sure I have a clear conscience and go to bed. And that's not taking advantage of people. That's right. I don't want to do that. And so, but I get that all the time. Well, I want to make it right. Yeah, we make it right, but it's not going to solve anything. It's not going to, it's not going to save me any taxes. And why pay me to do that? That doesn't make sense at all. So.
Well, and especially for a large commercial project, if it doesn't move the needle any, who really cares?
Right.
That's in the end, not that we're all in this just to make money, but it does need to be profitable. And so there is a profit motive there. If it's not there, then it's kind of a moot point. So that's really, really interesting. What are things that you think people could or should be doing as it pertains to the appeals process?
I would pay attention to sales in the neighborhood, if that's residential, or sales in the community if it's a commercial property. Just look at what's going on around you, et cetera. And then also be aware of the fact that assessment coming from the county is based upon a certain day of the year. In our case, it's January 1st. So even though the bill comes out in October, it's based upon a value 10 months ago. So you need to be aware of comparable sales or appraisal on the property or sale of the property in that particular time frame. Usually about 6 months to be decided. That is what will work in an appeal process with the county.
Right. Is there anything else, that you guys are using to build value or to build, I guess what the county sees as the value of the property other than recent sales? Either recent sales is that's in the hierarchy of evidence. The arm's length transaction is number one. So if you got a sale on the property, that's the strongest you can have. That basically has been on the market for a while. Someone come in and made an offer. They weren't compelled to do that. Secondly, would be an appraisal on the property. Third would be comparable sales. And if that doesn't work, fourth would be the listing activity. The property's been marketed for a certain amount of time, around that time frame we talked about when the assessment date is. If it's been marketed for a value below the real market value on the assessment, that's a good basis for an appeal, because the fact that the market has not reacted to a lower number based upon the asking price of the property on the multiple listing service. Got it. That seems to make a lot of sense, and probably something that's overlooked is the comparable properties that are listed out there. Yeah, and you say, okay, look, these have all been in the market for 180 days, and none of them have moved for a price lower than what you're saying my property is worth. So that's a really interesting piece of information there. What process or what would you recommend to anybody on a potential pre-buy? As it pertains to looking at taxes, looking at how we incorporate that into our projections, things along those lines.
I would take a look at what the county has, assessor has on the property, what the real tax bill is right now, and basically, try to process what it'll be going forward. If the market's gone up 8%, taxes probably go up 8% with that. So just kind of factor that in. I mean, everybody talks about it's a great market and all that. Yeah, but your taxes go up. Your taxes follow the market pretty much in almost every locale I know of. And if that happens in a great market, you're going up 10, 15% in taxes every year. And that's a hard, pill to swallow, especially if you're an investor, because you got to factor that back into the rent, or, somewhere it's got to come back out of the, to affect the bottom line. Secondly, I found that it's kind of interesting when the market is negative, which I've been involved with, the county doesn't seem to chase that value down as much as the market does. So one day I was on the board, and countywide, the average net was a negative was 18% across the board, and the county reduced the property values by 11% because it said it was market justified. And I'm a real estate broker, right? I got the same data they do. I'm going, no, it's 18%. It's across the board 18%, and they went down 11% because it benefits them to do that. They're not, they want to give away the farm, so to speak.
Right. Yeah. I'm thinking of a project that we had looked at, and it was appraised. This was in Cook County, Chicago.
Okay.
Oh yeah. We looked at the appraised value, and then we looked at what it would, and they were in a reappraisal year, which I don't know, how that all functions, because I think everybody's on their own schedule.
Right.
But they were in a reappraisal year, and how it ended up working out was that if we had bought it for the price that we thought it was worth, the taxes would have then it made the whole deal just not even pencil. It was like,
right.
Okay, Cook County's going to reappraise this, and then suddenly we're going to go flat broke owning this asset. So we had to walk. Right. I don't think it ever traded hands. Is there a way around situations like that for sellers?
Not really. I mean, they're going to reappraise it. They're going to reappraise it. That's what it boils down to. They're in a cycle. I think it's every 7 years here where I'm at, but it's on a cycle. They go back through and look up stuff. They don't physically look at it. They do it by computer. And I had a case here a couple of years ago, just kind of interesting story for you. We had a hotel that was built and came online in 2019. And so their first bill was in 2020. What happened in 2020 in March? We had COVID hit, okay? And so the county had based the value based upon a full hotel at the rate, the room rate that they were anticipating, okay? Versus the hotel was 19% occupied at a lot lower rate to get someone to stay there, okay? So we had about an $8 million differential between what the county said was worth and what we had on an MI appraisal. Wow. So we knocked the county off for about $200,000 on 2 years on that one. My client was very happy with that one because it was also a basis issue. We're establishing value that particular year. So we lowered that basis value to begin with. And so they'll have an artificially lower number, if you will, versus their competitors going forward because of the fact that COVID was there and affected the marketplace. And here's another thing I need to tell you, and kind of, I don't want to brag about what we do, but I've found that pretty much everywhere I go, the average turnover rate in an assessor's office is about 22% per year. Now, think about that for a minute. Okay. Every 5 years, someone brand new is sitting there. Right.
Right.
So there's not a whole lot of, what I get a lot of, my opinion is the Wizard of Oz kind of remind me of the guy behind the curtain. They're pulling a lot of levers and all this other stuff, but the people that are doing the stuff down there, for the most part, are either learning what they're doing or don't know what they're doing, one or the other. And you, the poor taxpayer, when you call in the office of the help desk, the newest person in the county is sitting there answering the phone for you. So you can imagine what kind of level of information you're getting from the county when you call in typically. It's not very good usually. And their attitude is pay the taxes and get them off the phone. That's what they want you to do. So there are people like me that do this nationwide. I'd recommend getting someone who has a little local knowledge, if you will. Some of my competitors are international, national, and all that. They're just going to send you some printed out comps from sales and all that. No breakdown of what those sales are. Someone like myself can break in and look at the marketplace locally and get a apples for apples comparison on your property. So that helps you.
Should we appeal every tax bill?
You can. And I have clients I call frequent flyers, my airline. They do every year, but it has to make sense. And a couple of them I've warned, hey, look, this isn't going to work this year. Let's try it again next year. And I have like 3,000 clients that I look at every year just for the, we're just looking at them right now going through the process because they're in my books, so to speak, and just review them every year and what their situation is based on the new tax value coming out from the county.
Yeah, no, that's the frequent flyers. I like that. That's pretty funny. Yeah, I know some friends of mine in the business just have a habit of it. They say, hey, look, we get a new tax bill, we're going to appeal it across our entire portfolio. It's just a course of action for us, and they seem to find value in that. I was really curious what you thought about that. Anything else that comes to mind that you think would be relevant or that we should really be paying attention to as it pertains to property tax appeals, timing, procedures, just anything along those fronts? You say, man, this is something that somebody should really be thinking about.
Well, first of all, look at your bill when it comes. Open the envelope and look at it, because a lot of people don't do that. They just go ahead. The bank's paying it. They don't care. The mortgage company's paying for it. They don't care. And then they call me in February and say, hey, I want to appeal this. Sorry, you missed the deadline. It was December 31st. And you had 4 months to call me. I can't change the timeline here. So that's the main thing, is take a look at it. If you agree with it, if you look around the properties in your neighborhood and you've seen some sales take place, and the number the county is saying is about right, I would just, pay the bill. Okay. If you don't agree with it, get a hold of someone like myself and say, hey, look, can you take a look at this for me? And most of the people I know in my industry usually won't charge or charge very little to have an initial review, initial consultation. But after that point in time, obviously, if you want to engage us, there's a letter of engagement comes out, and there's, money's change from hands and that kind of stuff. But typically, the initial review typically is either free or very, very, very low cost, one or the other, depending on where you're at. And, we're going to do between 3,000 and 4,000 of those here in the next 90 days. So just in Oregon alone.
Wow.
So I have a team that works with me, so I don't do it myself. Thank God.
It's a lot
of work, a lot of eyeball crossing.
To say you're moving fast if you're getting 3,000 or 4,000 of those out here in short order. Last question for you. What is the percentage of appeals that you handle that actually have some sort of meaningful difference in the tax bill? 94%
of our clients last year got a refund from the county or state that we filed for. So we're an A student. How's that?
You are an A student. I love that. No, and I don't ask just to ask how, your track record in particular, but really just to kind of paint a picture as to what a property tax appeals specialist, probably in general, can expect or we could expect to see, results from. 94% of the time sounds pretty good to me.
Yeah, I don't know what that number is for the rest of the industry. I will tell you this: if someone in my industry guarantees you results, don't walk from them. Okay, because I get a lot of my competitors will say, "Oh, yeah, we can get this thing. We can get it done. Give me $500 up front, and I'll work on it for you." No, don't do that. Don't throw away $500 on something that's not going to. You don't even have a reason to be there, quite frankly. Okay,
right.
Think it through. I mean, obviously, the tax bill creates a lot of problems. It's usually the largest bill people write to the government every year is the property taxes. Over IRS, over the state local taxes, if you will, and there's not little you can do about it. And people don't know that much about it. It's kind of interesting. It's the biggest check you write every year, but you don't really know what's going on. So,
right.
Obviously, dig in a little bit. Bone up on it as a property owner, and just figure it out. That hey, what's going on in my neighborhood or if my commercial building, what's going on there, and make a decision based off that information. Then maybe call someone like myself and say, hey, or email, hey, can you take a look at this for me? What do you think? And that's the way I would do it.
Fantastic. Steve, thank you for taking the time to come on the show today. Certainly appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Email is steve@1stcp.com. That's number one, S as in Sam, T as in Tango, C as in Charlie, P as in Papa.com. We have my phone number is 503-869-4349. It's my cell number. It's with me all the time. We also have a website. It's propertytaxavengers.com.
Love it. We'll make sure we put all of that information as well there in the show notes. Steve, thank you again for taking the time to come on today. I do appreciate it.
Thanks, Sam. Nice meeting you.